Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. It's Tuesday, it's the 22nd of September, and the market's the last day of summer officially. And here we are, the markets are beginning to roll over. We've been very concerned about the trend in terms of people getting sucked in, thinking it's going to go higher. The reality is trends tend to persist longer than most people expect. We've been in a 6-year bull market. Let's not forget that. It's only once in history have we gone over 6 years in a bull market. So let's take a look at what's going on right now. As you can see, we're looking at a daily chart of the Dow. This is our original sell signal here, which is 17,579.27, and that was on the 30th of June. So you can see it's been going down. We sort of went sideways for a while, but it's actually been going down. It's 1,000 points lower right now, actually 1,200 points lower right now than the original signal. So let's see what we're looking at. We talked about the trend line. We've broken through the trend line. You can see that clearly right here, and it hasn't gotten back over. So that's going to push this market down, in my opinion. The other big piece of resistance for this market, of course, was the RSI, which we pointed out before. Just got up to that resistance level of 50 line and turned back down again. So again, I think we're going to see this market go down, and also the RSI to take another plunge towards the 30 line. Let's see how that plays out. One last thing on the Dow, it will accelerate, and here's the number to watch in the Dow. Let me write that down for you so you have it on your books. So the number we're looking at is 15,979. Okay, if the Dow goes below this number, then it's going to begin to accelerate on the downside. So watch this number very carefully this week. 15,979. It's for this week only. On the S&P 500, the same picture there. The key number to watch is 1,903. If we break this level, it's going to accelerate on the downside. It'll turn this triangle red, and we'll see this market really begin to move down. You can see we've got right to the resistance level, which we've been pointing out for the last several days. We didn't expect the market to go any higher than where we did right here, and of course it's broken below this trend line. So again, look for this market to begin to pick up momentum on the downside, particularly if we go below 1,903. On the Nasdaq's holding up pretty well, but the reality is it's going to turn down as well. It's not going to be immune to the downturn. The key number to watch this week on the Nasdaq, and we're quite a ways from there, is 4,614. Okay, so that's the number to watch on the downside. If we get below there, it's really going to begin, in our opinion, in the numbers right around here, it's going to really begin to accelerate on the downside again. But we've made the turn here. It looks like we're making the turn again here. You can see today's action is not that positive at all, and I think we'll see this market actually come under more pressure as the day goes on. So again, don't get excited about trying to pick a bottom. These are markets that are trending lower. You can see our monthly kicked in right here, which is really at 4,888. So it's quite a bit higher than where the market is right now. Even though we had this Fibonacci retracement, we talked about that, that's over with now. So we're going to go back on the downside. We're looking at the euro. The euro is not acting well. You've had several down days, actually the third, fourth day down. And we're looking at the key area there to look at, in our opinion, is going to be this number right here, 1088. That's key level to watch, and it's right around these levels right here. So watch that level. If we go below that, then you're going to turn this key technical indicator, the weekly, which we use for the trend for currencies, into a red triangle. That would not be a good sign. It would begin perhaps a test of the lows. Very choppy area. We're saying it's a 55, indicating a trading range, and that's what to remember. But we've just moved below the 50 line on the RSI, indicating further weakness. So let's see how that works out. The gold market just has not got a lot of oomph on the upside, but it could be possibly basing out. We don't know yet, but all of our trade triangles are red, indicating the trend is down. You're just right on the 50 line here, which possibly could give it some support, but the key level to watch, in our opinion, this week is going to be this level right here, and that is $1,147.45. That's a 4 right there. That's the key level to watch this. If it goes over there, that's going to be a push over these levels right here. That's going to indicate the trend. At least these two triangles will turn green, meaning you should be long the market. But right now, it doesn't look with today's action, it's in the cards to happen. So let's watch that the next day or two. This is crude oil. Crude oil, as you know, we've been sort of somewhat bullish on this. Both of our trade triangles are green, indicating the trend is higher. We sort of flattened out a lot, but we're dancing along the 50 line. We are still positive on this market. The key level to watch this, which would change our ideas on this market, is going to be $43.99. So $43.99. That's the key level we're watching in this market, which is right around here. If it goes below that level, then I think things have changed and our analysis is wrong. But to us, it seems like we've had the move up, we've had the breakout, and we're sort of going sideways. We're dancing along the 50 line. So there's a good chance we could go higher from where we are right now. But let's see how that plays out. This is Adam Hewison from Market Club. Stay strong, be disciplined, and every success is your Market Club. I'll be back tomorrow. Thanks for watching.